Okay, then come back. Okay, shall I? Listen. Oi. Now, the standard on auditing that we are taking up is SA 501, which is on audit evidence, specific consideration of selected items. Now, when I say selected items, there are three items which are there. Repeating the heading again, audit evidence, specific consideration of selected items. So there are your three items which are selected on which the auditor basically has to focus and check. This again is covered by nothing but your chapter number 3, which was on audit evidence and documentation. Okay, so this is covered there only. We are taking it up now. Now, when I say SA 500, if you remember, SA 500 was on audit evidence. This is 501. So it is an extension of audit evidence. So see, audit evidence is getting extended by what heading? Specific consideration of selected items. If I have 500, it is only audit evidence. If I have 501, it is nothing but on items. One is for items. And how many items you have? 3. Which 3 items? One by one. Firstly, inventory. Inventory, stock. Second, litigation and claims. What are litigation and claims? Cases against the company. Okay. And claims made against the company. And lastly, segment information. If you people remember, segment information, though you already know. It is because that is covered by accounting standards. Come on, yeah. Can you tell me segment information, business segment, geographical segment? Correct, AS 70. So ultimately, can I say segment information is the same thing which is covered in AS 70? The only thing is now we will look from the viewpoint of the auditor. That is the only difference. Okay. So three things, three items: inventory, litigation, and segment information. Most important is inventory. If there is a question which comes from this standard, which has come before, it normally comes from inventory. It hardly comes from litigation and segment information. It majorly comes from inventory. So our main focus will be to learn inventory. Now, let us go one by one. First is which item? Inventory. Now, when I say inventory, stock, what is the objective? What should the auditor check? Very simple. The objective is to obtain say. What is say? Correct. Sufficient appropriate audit evidence regarding two things of inventory. One, existence of inventory. Second, condition of inventory. Repeating, it is to obtain say regarding two things of an inventory. One, existence of an inventory. Second, condition of an inventory. Existence of an inventory is basically to check whether inventory is actually there or not. If you people appreciate existence, you should know here. Can I say it is basically verified by conducting physical verification? If inventory is actually there, can I say it should be there at the go down? So can I say auditor will have to go to the go down and he will have to visually check whether inventory is actually there or not. When it is there, it is in existence. When it is not there, it is not in existence. So auditor will have to check whether they are in existence or not. Secondly, check the condition, whether the condition of that inventory is proper or not. I hope you realize when I say condition, you should just check whether the finished goods have remained finished goods and they have not become scrap. So two things, existence, condition. Be careful. Your valuation, etc. is not to be checked as per this standard. Obviously, auditor has to check whether they are valued properly or not. But this standard does not focus on valuation aspect because that is something which is covered by AS2. So here basically what we focus is on two things only, existence and condition. But when inventory is material to the financial statements, inventory should be material, no? What if I tell you there is a financial service sector? Say for a simple example, even JKSC, we are into service industry. We are giving you nothing but service of nothing but lecturing. Use common sense. Will we have inventory? No. Then if we don't have inventory, this will be applicable? No. Then use common sense that inventory should be material to the financial statements too. If that inventory is not material, will you have this standard? No. Then I hope as auditor will not follow this particular thing because an inventory is not material. So obviously this is to be checked only when inventory is material. And it is material normally for two types of organizations. One, which is into manufacturing industry. Second, which is into trading industry, because for trading industry, purchase and sale of goods is the only business. So the goods become material. All cool? Wait, up till now explain what I have told. SF501 audit evidence is specific consideration for selected items. How many selected items are there? 3 items. Which 3 items are there? Inventory, litigation and claims, and segment information. Now, when you people talk about nothing but inventory, can you tell me what is the objective? Objective is to obtain, say, regarding how many things? 2 things. One, existence of an inventory, and second, condition of an inventory. Existence to check whether it is there or not, condition whether it is proper or not. Acha, but this is to be checked only when? Only when inventory is material. If inventory is immaterial, will it come into picture? No. Okay. Now, please, can you just think yourself, when you are checking existence and condition of inventory, what all points you will keep in mind when you are checking the existence and conditions? Can you just think about certain points related to inventory? Focus only on inventory. Yeah? What do you think you should check of that inventory? Think. What all points you will keep in mind when you are verifying the inventory? Think. Whatever comes to the head here. The quality of inventory, okay. The situation, fair enough. Proper maintenance is there or not? Valuation, valuation. The quantity units, okay. Whether properly maintained or not. Quantity. Number of inventory in books and reality, correct. I hope there can be a difference. Depreciation, okay. Inventory secured or not, okay. ICS, very nice, Ablashi. You'll have to check the ICS for it. Physical verification, exactly. Efficiency of ICS, correct. Accounting policy followed for the inventory is proper or not, very nice, not bad. Apart from that, safety precautions in taken of hazardous goods, fair enough. Ultimately, if it is nothing but inventory for firecrackers, it should not crack on you only. Okay. Whether it is insured or not, okay, fair enough. Apart from that, who will conduct physical verification? Management. So ultimately, can I say you will have to check the management's procedures, what they are doing, whether management is carrying out it properly or not. Correct. Okay, fair enough. Decent answers. Recording of unrecorded inventory, if any, not bad. See, these are the general procedures which you have to carry out the inventory for. What general procedures in case of inventory? Firstly, you will have to do attendance at the physical inventory counting. Wait, who conducts physical inventory counting? Management, which I told you when I did Caro. I have repeated it many times. But can I say auditor will have to go there and he will have to check whether what management is doing is proper or not. So who is going to do? Management. Secondly, evaluate management's instruction. What they are giving instructions in order to count the inventory, whether it is proper or not. In other words, observe management's count procedures. I'll give you example. Supposing say there are 1,000 boxes. 1,000. I'm not going to draw 1,000. Time will be up. When ultimately I say there are 1,000 boxes, say there is management. Say there are employees. And then there is me, big guy, auditor. Now, obviously, I will have to look through my specs whether what they are doing is proper or not. Now, this is management. Say this is the company's employees. Management will give instructions to the employees. That, hello, employees, you do one thing. You check whether the inventory is proper or not. Count the inventory because we have to write the inventory in the balance sheet. So ultimately, what if they tell, do one thing, open only 1 to 3 boxes. Out of 1,000 boxes, they are only checking 3 boxes. This is enough? No. Then obviously, what will the auditor think? Me. Suddenly, I hope I'll become angry now. Then use common sense. Can I say, then I will have to evaluate the instructions which are given by the management, whether their count procedures are proper or not, whether their instructions are proper or not. Not only that, when I am auditor, I also on a random basis should select some of the box and check, whether in the box actually the goods are there or not. It may happen that it is a box, but I hope there are no inventory inside the box. So ultimately they are doing window dressing. So ultimately, can I say you as an auditor will have to inspect whether actually the inventory is there or not. So what you can do is you inspect the inventory and you perform test counts. Test counts is ultimately just open few boxes and check whether inventory is actually there or not. You don't have to open all the boxes. All cool? Wait. So firstly, what? You have to attend the physical inventory counting. Okay. Attending there, what will you check? What the management is doing. So check whether management is giving proper instructions to their employees or not. Check ultimately how are they counting. Then you yourself inspect the inventory, whether actually those boxes have inventory or not. And you also perform test counts. You also take up nothing but few boxes and check whether inventory is actually present or not. All cool? Wait, can I say that management may have counted the inventory? Then can I say they will write that in the balance sheet? Can I say in the balance sheet there will be a certain number? Can I say that number should match with this number? No. What is there in actual should only be there in the recorded. So auditor will have to examine nothing but entity's final record versus the actual results, whether they are reasonable or not. Obviously, some fluctuation is acceptable, but if it is too much, you already know analytical procedures. Then ultimately auditor will do analytical procedures. And if there is a wide fluctuation, he will ask the management, batao, why like this? All cool? Come on, tell me. What are the general procedures auditor has to do for inventory? He has to do attendance at physical inventory counting, evaluate management's instruction, check the management's count procedures, whether they are proper or not. You yourself inspect inventory, you yourself perform test counts. And lastly, examine nothing but the final records with nothing but the ultimately I hope rise whether it is matching or not. All cool? See, when I say actual results, this actual results is what you are going to observe. This record is ultimately what will be there in the balance sheet. Recorded is what will be there in the balance sheet, what they have recorded. Actual results is what you are seeing here at the go down, observing. All cool? You'll not believe this comes in the exam for 5 marks. This is what comes in the exam. What are the general procedures auditor has to carry out in case of inventory? Then you have to write as per SA 501. The following are the general procedures auditor has to carry out for the inventory. Then you have to write attendance at physical inventory counting, evaluate, examining. All cool? All cool. Later on copy re. First let us understand entirely. Listen. Now can I see has to attend physical inventory counting? This is what he has to do, no? Acha. By the way, who is going to count? Management. Who will attend? Auditor. So can I say I have to go there and then I have to verify what they are counting is proper or not? Acha. Now can I say, so they will tell me when they are going to conduct physical verification? Normally it should be towards the end of the year when the balance sheet is going to be made. Now say due to any reason, I cannot go on that date when they are doing physical verification. Repeating, due to any reason, I am not able to go on that date when they are doing physical verification. Supposing they decided that we will do physical verification on 31st March only. Who decided? Management. So obviously auditor will have to go no to check what management is doing. What if it is not possible for me to do so due to any reason? Say ultimately I hope as I fall sick or ultimately I'm not feeling like, okay. That is basically your reason, correct? So ultimately my simple question, what if due to any reason he cannot go? Then what should be done? Then he should tell management, nah, don't do on this date. Do on some other date. Now management will either agree or they will disagree. Now if they disagree, they are telling, hey auditor, you come or not, we are doing okay. Your wish. Our job is our job. So ultimately management disagreed to reschedule it. So they are doing on 31st March only. Think and answer. Are you going on 31st of March? No. But they are doing on 31st of March? Yes. Think. Do you have any information of physical verification? No. Then what will you do? Then can I say you should obtain some other audit evidence? Can you tell me what can you obtain? Very good. You should obtain a written representation. Take a written representation from the management. Management, batao. Whatever is the inventory which you think is there as per you. Sign it and give it to me. So that at least for me there is some evidence. But I have told you before also, written representation cannot substitute verification. Where verification is possible, do verification. When it is not possible, take written representation. You remember I had given you written representation example of stock only. But if verification is possible, you should do that. No. Acha, then can I say I will obtain a written representation and then I will decide what should be the impact on my opinion. But I will obtain a written representation. Acha, second option. Say it was not possible to go on 31st March. Management agreed to do it on 10th of April. So can I say now the auditor will have to go down on 10th of April? Now use common sense. Obviously, when he goes to the go down on 10th of April, whatever was stock on 31st March, will it be the same on 10th of April? No. Can I say obviously during this 10 days, there may have been transactions? Can I say during the year company must have purchased something? Can I say during this time the company must have sold something? And can I say then at the end the stock will remain? Wait, what are you verifying? You are verifying on 31st of March what was the stock. But are you verifying on 31st March? No. You are verifying on 10th April. My question to you, on 10th of April, how will you verify what was there on 31st March was correct or not? How will you verify on 31st of March it was correct or not? Correct. Can I say what you will have to do is you'll have to do stock reconciliation. Can I say you will have to take this as the base stock, then you go reverse and then check whether that stock is matching with this number or not. When you go reverse, can I say obviously purchases has to be subtracted, sales have to be added back, and then you should get a number which is close to this. Then you can say whatever was there on 31st of March is correct. In other words, can I say like this? You as an auditor will have to check whether the changes in the inventory during this period, whether they have been properly recorded or not. You understood what happened? Wait, two situations I told you. One, what if it is not possible for the auditor to go to the go down on the physical inventory counting date? Then obviously he will tell to the management to reschedule it. If the management reschedule it, good. If they don't reschedule it, then correct. Then ultimately obtain a written representation. Finally, impact will be on the auditor's opinion. Acha, see, they may not reschedule it because ultimately, obviously, there may be some fraud also, no? They're like, good, auditor does not come. Then obviously it hints there may be a fraud because they are not rescheduling it. So obviously impact may come on auditor's opinion. Secondly, what if they reschedule it and you do it on an alternative date and not on the balance sheet date? You have to check whether the changes have been properly recorded or not. In other words, you'll have to do reconciliation. All cool? Acha, last thing, not possible only to go to the go down. On any date, it is not possible because ultimately, I hope say it is impracticable. Say ultimately, it is a I hope it is a containment zone. You remember I had told you containment zone like what? Ultimately, I hope it imposes a threat to the safety of the auditor. So will he go there? No. So ultimately, will he get audit evidence? No. Then ultimately, what should do? Can I say again, you should obtain a written representation. All cool. Wait, see. Where did it go? This store. See, when you are talking about physical inventory counting, there are three things basically. If you are unable to attend, then you have to do it on an alternative date. If management disagrees, then you'll have to check the impact on your opinion. Secondly, if you performed on an alternative date, check whether the changes in the inventory have been properly recorded or not. So 31st of March, but if you do it on 10th of April, then obviously can I say this number has changed with this number? You'll have to check whether the changes are recorded or not. And if attendance is impracticable, you cannot go at all, then you do PAP, try to obtain audit evidence like a written representation. If that is not obtained, then ultimately can I say you have to modify the opinion as per SS 705 because definitely it indicates either there is no say or if they are refusing it indicates it is a material misstatement. Come on, yaar, manageable. Okay, last thing, this part for inventory. Factors when attending physical inventory counting. This is only for physical inventory counting. These are general procedures for the inventory. Now I am talking about the procedures or the factors when you are doing physical inventory counting. So who is going where? Auditor is going to the go down. to check whether the stock has been properly calculated or not. Then what factors I have to keep in mind? See, firstly, the nature of the inventory. You have to check the nature of the inventory, perishable goods, non-perishable goods, because according to that also your numbers will change. Acha. Secondly, stage of completion in case of WIP. Because I hope realize what may be WIP may have become finished goods. So ultimately you'll have to check. Initially it was in WIP, now it is in finished goods, or still it is in WIP. Next, ROMM. Why ROMM? Because that depends upon ICS, no? Ultimately, what if I tell you the ICS for that stock is weak? What if you don't have a CCTV camera? What if you don't have a storekeeper? Then can I say misappropriation of goods will happen? Chapter number 5. Hello. Ultimately, the lower level people will take away stock, no? So ultimately, you'll have to evaluate ROMM for nothing but stock. Whether ROMM is high or whether it is low. That will depend upon ICS. Check whether the instructions have been issued properly. Who will issue instructions to whom? Management will issue instructions to the correct employees, whether ultimately they are calculating stock properly or not. Next, the timing, whether ultimately you are able to attend that on that time or not. Acha. Whether the company maintains perpetual inventory system. What do you mean by perpetual inventory system? Stock record. I hope as any inflow or outflow of the goods have to go through this. Next, check the location of the inventory, whether ultimately you are able to go in that particular location to do physical inventory counting or not, because there may be a chance you may not go. Achha. And lastly, check whether the auditor's expert advice is required or not. That depends upon auditor's professional judgment, whether expert is required or not. Come on, tell me. First is nature of the inventory, stage of completion of WIP, risk of material misstatement, ICS. This is to be learned tandem, ICS and ROMM. Next, instructions are issued properly. The timing, thereafter the perpetual inventory system maintained or not, the location at which inventory is held, whether it will be possible for him to go or not, and whether auditor's expert advice is required or not. All cool? Examination 5 marks. See, I'm really not telling it is difficult. The problem is the points are increasing day by day. Now, when the points are increasing day by day, I hope realize your memory has to remember those points day by day. But that happens only when you people will revise. Now, luckily now, what has happened is for 1 week, there is no auditing lecture after this. So ultimately, my serious advice to you will be you at least revise whatever we have done up till now as much as possible, but go in LIFO. Why go LIFO? Because whatever is done last now, like you start revision with this only when you revise, so that ultimately it gets very fit in the brains, because whatever is fresh always is remembered very fast. So ultimately you just go in LIFO mode. So whatever is done latest goes in the head. All cool? All cool. Acha. Thereafter, 3 things. If auditor is unable, do it on an alternative date. Management agrees, you know what to do. If on an alternative date, check whether the changes in inventory are recorded. If attendance is impracticable, finish it. If it is impracticable, what to do? I cannot go. You do PAP, say, take a written representation. If not obtained, then ultimately authorize modify as per SS 705. All cool? Last question. Inventory of the company is there with a third party. What to do? Inventory of the company is there with a third party. It is not there with the company. For a simple example, say it is there with the consignee. Possible, no? What to do? Come on, come on. Good. Sahil, nice. Naveen, correct. Shri, perfect. Mohit, correct. Vansh, correct. Reshma, correct. Can I say what you should do is external confirmation? This we have learned in SA 505. See how you can connect the essays also. See, it is there with the third party now, so I'll have to ask, do the third party only know? Third party, batao, whether the goods are with their you or not. So I will write a letter, send it to them. They may then respond in that particular letter, whether it is there or not. So see, if inventory is with the third party, then what audit procedures? External confirmation as per SA 505. Ultimately, other audit procedure, you can take a written representation from the management, and obviously you can go there and inspect whether ultimately the inventory is actually there or not. Manageable? Okay. Come to the textbook. Let us mark inventory first. Thereafter, we go to the last two. Last two are very simple. They are hardly anything. Page number, so you will only have to tell me because your page numbers are your page numbers, none of my page numbers. See, this is where you have to come. Point number 6 for me on the last. It is below, you know what? It is below SA 580. Page number 81 then, as per some assumed to be reliable sources. Look how they have given for me. One line they have given on that page number, the heading. I mean, heights, yeah. Come on. What is the objective? Objective is to obtain say. Say regarding how many things, yeah? I told you now, 3 items. First, inventory. Second, litigation and claims. Third, segment information. Now, firstly, when you talk about inventory, this is the most important out of all. Now, audit procedures for inventory, but when inventory is material to the financial statements, okay, the auditor shall obtain say regarding what? Two things. One, existence of an inventory. Second, condition of an inventory. Acha, what will you do? Hello, can I say these are basically the general procedures that he has to carry out? In other words, see this part. Oi, listen now. This part. These are the general procedures that he has to carry out, no, for inventory. So how will the auditor check the existence and conditions? By doing something, no? Can I say by doing this thing only? Then we are focused on that part only. See, evaluate management's instructions and procedures for recording and controlling the results of physical inventory counting. Observe management's count procedures. You inspect inventory. You perform test counts. Then performing audit procedures over entities, final inventory records to determine whether they are accurately reflecting actual inventory count results. So recorded versus actual. Thereafter, this is when the inventory is under the custody and control of a third party. If you people remember, just a while back I did that, no? Third party, then what to do? This is, you can consider as a separate part. I'll give you the question, don't worry. Then if that is material to the financial statements, auditor shall obtain say regarding existence and conditions by performing one or both of the following. So request confirmation from the third party as per SA 505, external confirmation. And perform inspection or other audit procedures appropriate. These are audit procedure when inventory in custody of third party. Come on, yeah, manageable, yeah. Thereafter, see, factors to be considered while planning attendance at what? Physical inventory counting. In other words, I'm talking about this part. Oi, this part. When you are doing physical inventory counting, when you are planning that, what factors you should keep in mind? So what will you check when you are going to go to the godown? What is the nature of the inventory? WIP, if there is any, whether it has become finished goods, how much time does it take to convert WIP to finished goods? How is the ICS? Whether ultimately they are maintaining a stock record or not? Where is the inventory located? Ultimately, whether export will be required or not? What time am I going to go there? Okay, cool. So we have nature of inventory, stage of completion for WIP. This is ROMM, ICS related to inventory, whether adequate procedures are expected to be established and proper instructions issued for physical inventory, the timing when you are going to do it, whether they maintain perpetual inventory system, in other words, stock record, good. The locations at which inventory is held, see, including the materiality of the inventory and the ROMM at different locations. In deciding at which location attendance is appropriate. Why? They may have different go downs, no? There may be a chance that major inventory is kept at this go down. It is not kept at this and this go down. Then I will not go here and here. I will go here only. Or say ultimately there is a chance they have two go downs. Inventory is there, but ROMM chance here is more. Then I will go at this go down rather than this go down. Because ultimately risk of material misstatement is there more in that go down. You're understanding? Okay. Thereafter, whether assistance of expert is needed. Five marks. Thereafter, hello, correct, dancing definitely. Can I say this also 5 marks? Huh? These are your general procedures for the inventory. Okay. Thereafter, see, when he is doing physical inventory counting, if the auditor is unable to attend inventory count, what to do if he is not able to go? He should try to do it on an alternative date, no? So see, if you are unable to attend inventory counting due to unforeseen circumstances, I fall sick, hello, okay, any reason, then auditor shall make or observe some physical counts on an alternative date. But obviously management should agree. Huh? Now, if say alternative date you have done, so inventory count is performed on an alternate date. In my example, it was 10th of April. Then what will you check? Whether the changes. Then see, if physical inventory counting is conducted at a date other than the date of the FS, the auditor shall, in addition to the procedures required above, he shall perform audit procedures to obtain audit evidence about whether the changes in the inventory between the count date, in my example 10th of April, and the date of the financial statements, in my example 31st of March, are properly recorded. Dania. Okay. See, what if physical verification is impracticable? The last part. It is not possible only for me to go. Then what will you do? Correct. Then ultimately you should obtain say. Then ultimately how will you obtain say? Can I say through a written representation? Basically. So I will do PAP only, no? Then see, if it is impracticable, auditor should do PAP. It is always like that. Why? To obtain say regarding existence and conditions. If it is not possible to do so, it is not possible for you to ultimately get that sufficient and appropriate audit evidence, then you have to modify the opinion as per 705. You remember when do you modify opinion? Under two situations. When ultimately I hope that there is no say, and when there is say and there are material misstatements. When there is no say, or when there is say and there are material misstatements, then you give modified. Modified is 3, no? Adverse qualified disclaimer. Perfect. Come on, yeah, done, yeah. Bus, this is what is inventory. Difficult? Come on, let's do the last two then. The last two which are there, they are very small. Litigation and claims and segment information. Let us talk about litigation and claims. Okay. Now see, what is the objective of litigation and claims? Very simple. Just to identify whether litigation and claims are there or not. So my job is just to check whether litigation and claims is there or not. Wait, how do you think you should identify litigation claims? How will you come to know whether there is a claim against the company or there is a pending case against the company? How will you come to know? Ask to the management only. Management, batao, whether there is any case against you going on or not, whether there is any claim against you made or not. Can I say I can ask them? Achha, what if they don't give me proper answers? I can ask to TCWG. Not only that, use common sense. What if there is a legal expense account? And ultimately, I hope they have paid certain money to cash bank. What does it indicate? That they are paying a lawyer? When do you pay a lawyer? Anytime? Huh? Can I say they must have paid a lawyer due to any case? So can I say when I review this account, I may come to know that there is actually a litigation against the company. You're understanding what I'm telling? Acha. You know, companies also have lawyers. They keep lawyers. They are known as in-house legal counsel. Repeating, they are known as in-house legal counsel. It is just a fancy name. There is nothing great about it. In-house legal counsel is basically nothing but the company's lawyer. You know, many number of times in movies, etc., we see that ultimately, I hope realize suddenly you get into any company and there is a CEO and you tell that CEO, now you are arrested, come on. And they tell, wait, let me talk to my lawyer. Then what do you mean by let me talk to my lawyer? Ultimately, that lawyer is basically the company's lawyer who is known as in-house legal counsel. Okay. So ultimately, if there is any in-house legal counsel, then I will like to talk to him so that I come to know whether there is any case against the company or not. But what if I tell you there is no in-house legal counsel? Then there may be some external auditor, the external in-house legal counsel, external counsel. Then I will have to do nothing but calling there and asking him, hello, external counsel, is there any case against the company or no? It is not necessary he will respond to you. Not because you are like that. It is because ultimately I hope there is a chance that he may not break confidentiality. If you people appreciate, just like the auditor has confidentiality. Hello, I can see what Andu Pandu Dondu cannot see. There was confidentiality. Auditor does not disclose information to a third party. For that external counsel, auditor is a third party, no? So ultimately there may be a chance that ultimately external counsel may not tell you anything. No problem. Then you do pop. All cool? Wait, see, what is to be done? To identify litigation and claims, what are the audit procedures? Inquire with the management and in-house legal counsel. What is in-house legal counsel? Company's lawyer, basically. Thereafter, review the minutes of nothing but the management, TCWG, in-house legal counsel. Check whether ultimately they are talking about any case which is there or not. Next, review the legal expense account. From that expense account, you may come to know whether there is any case or not. And lastly, obtain a written representation from the management. Management, you give me in writing only that ultimately there is a case against you and ultimately these are the claims against you. If they don't give you in writing, obviously there may not be a case. All cool? Achha. If risk of material misstatement you think is high, in which case it will be high? Supposing there is a transaction in the legal expense account, but management is telling no. So can I say they are trying to hide something? If they are trying to hide something, try to directly communicate with external counsel. But if you are not able to, because that will break confidentiality of the external counsel, then what you have to do is pop. That depends upon auditor's professional judgment. In other words, what he will do is he'll obtain a written representation only in real life. All cool? Okay. And the last one, segment information. Hey, you tell me how many segments are there? A17, no? Hello? 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 A17, come. A17, no, basically two types, no? Hello, business segments, geographical segments. Yes or no? Why are you looking like this? Yeah. You have to teach me. Yeah. I don't know. Yes. Yeah. You have to tell me. No. How many types of segments are there? Two. Geographical, business. Can I say ultimately the segment, they can become reportable? When the segment becomes reportable, auditor has to check whether that segment information is disclosed or not. That's it. The only procedure he has to check is that only, that whether ultimately that presentation and disclosure is made properly or not, whether the method used in order to tell whether that segment is reportable or not, whether that is proper or not. Wait, who will report this? Management. Who will check? Auditor. Whether the segments are properly reported or not. So see, what about segment information? This much only. To verify whether the presentation and disclosure of segment information is as per FRF. Can you tell me what is the FRF basically applicable here? AS 17. Correct. Thereafter, procedure, obtain understanding of management's method used, whether the method used for identifying the segments, whether they are proper or not. And lastly, analytical procedures. If the segments were there in the last year, whether the same segments are also there in the current year or not. If not, then why have they become unreportable? All cool? Wait, come on. Firstly, what about litigation and claims? Only job is to identify. What are the audit procedures? Come on, first. Inquire with the management and in-house legal counsel. What is in-house legal counsel? Company's lawyer. Acha. How can you identify? Can I say I can review the minutes of the meetings of the management, TCWG and the in-house legal counsel? Acha. Then I will see the legal expense account. If in that expense account ultimately I see there is a transaction, it indicates there may be a litigation and claim. And lastly, obtain a written representation. Okay. Thereafter, if the risk of material misstatement is high, then ultimately I may talk to external counsel. But if it does not communicate to me, then ultimately I'll do PAP. Thereafter, segment information, what to do? To check two things. One, presentation and disclosure, whether of segment information is as per FRF. Which is the FRF applicable here? AS 17. Basically, what is your audit procedure? Very simple. To understand whether the management's method used in order to identify the segment is proper or not. And analytical procedures. If there were nothing but segments in the past year, there should also be those segments in the current year. If they are not reportable in the current year, why they have become not reportable? All cool? Come on, textbook. Come on. This is your second part. Verification of litigation and claims. Only one thing you have to do, identify. How will you do? These are audit procedures. Okay. In order to identify litigation and claims. Inquiry of the management, where applicable, including in-house legal counsel. When I say others within the entity, example TCWG. No. In-house counsel is different. External counsel is different. In-house counsel is basically the company's lawyer only. External counsel is not the company's lawyer who helps in the day-to-day law matters. External counsel is somebody from outside, independent person. Thereafter, reviewing the minutes of the meetings of TCWG and correspondence. What is correspondence? Communication. Communication between whom? Entity and external legal counsel. Freelance. Correct. Next is reviewing legal expense account. Thereafter, you seek, that is, try to get direct communication with external legal counsel, especially if the ROMM is high, as per SA 505. External confirmation, no? I'll ask him. Please tell me. Is it necessary? They will tell. No. Then see, the auditor shall do so through a letter of inquiry prepared by the management and sent by the auditor, requesting the external counsel to communicate directly with the auditor. But see, last point, if law or regulation or the respective legal professional body, just like for us it is ICI, for them it is nothing but their law board, If they prohibit stops the external counsel from communicating directly with the auditor shall perform PAP. Come on, yaar. I hope it is linking now in the head. See, you should imagine in the head what is happening. Like auditor, he's trying to do this, but ultimately he's not telling that I will do something else. Huh. And see, the auditor shall request the management, where appropriate, TCWG to provide written representation. See, I'm telling you now, this always used to come. That all known actual or possible litigation and claims have been disclosed to the auditor and appropriately accounted for and disclosed as per FRF. Come on, yeah, definitely manageable. I'm not going to open up. That is not the way that you are going to get rid of me. Acha. And lastly, what we have is verification and presentation of segment reporting. This is bogus, yeah. This is just for time pass. See now how much it is. See now. The auditor shall obtain say, everywhere it is say only, regarding two things. One, presentation. Second, disclosure of segment information as per FRF or not. How, how will you do this? Obtain understanding of the methods used by the management. Obviously, you'll have in A17, obviously, there is a manner na, in which the segment becomes reported. I hope realize not all segments are reportable. Whether they become reportable or not, that you'll have to check. So that method management will have to use. And evaluate whether such methods are likely to result in disclosure of what? Of segment information in accordance with the applicable FRF, and where appropriate, testing the application of such methods, whether they have applied that or not. Performing analytical procedures appropriate in the circumstances. Come on, yaar, manageable. Main part, if you ask me, was inventory. It is in line only. It is diminishing marginal utility. I hope realize most important is inventory. Lesser than that is litigation, and least important is segment information. But since it is there, I gave it to you. You want to copy this? Come on, finish it. Acha, entirely. Next class. Yeah. Come on, do it. Do it now, yeah. It's okay, yeah. 2-3 minutes more, yeah. Let's finish it now. Acha, you all will take screenshots, sir. And then copy. Huh? You really want to copy in the next class? It's okay. I can give to you. It's fine, yeah. I have no problems, yeah. Okay, go. I'll give you in the next class. Don't cry, yeah. Be happy in life. Go. Chill.